Well, howdy partner, welcome into today's video where I'm going to go ahead and share with you guys 8 stocks or 8 stock categories that I think are going to absolutely get leveled if the Chinese economy really completely falls apart, which is a possibility. It's not anything that is for sure, but it is certainly a possibility. What we have seen over the past year is that we have seen the Chinese numbers weaken and weaken. We've seen them miss numbers over and over again, and a lot of people don't even trust a lot of the Chinese numbers as it is. So if you don't already trust them and then they're missing those numbers that you don't even trust to begin with, obviously that's a pretty bad sign, right? So let's say the Chinese economy really crashes in a massive way. They go into a big recession. What are some of the stocks that will get hit the hardest? Okay, that's what today's video is all about. I'm going to go into detail on some of these stocks that will get absolutely leveled, okay? Doesn't mean any of these stocks are bad stocks overall. And actually, a lot of these stocks are great long-term investments. And once the whole Chinese economy comes back, they'll do phenomenal. But let's say the Chinese economy crashes. What type of stocks are going to get hit the hardest, guys? So that's what we're going to talk about here today. I'll kind of go through some of these different stocks. Some of these are Chinese-based stocks. Some of these are actually US-based companies. So I hope you guys enjoy this. As always, make sure you hit that thumbs up button and let's get into this. Alrighty, guys, the first one is actually a group of stocks, all right? And this would contain Alibaba, JD.com, and Vipshop. 3 companies that get by far and away the majority of their revenue and profits from China, specifically JD.com and Vipshop. Okay, Alibaba's a little more diversified, but honestly, Alibaba at the end of the day, it's a Chinese company who does most of their business in China. So let's say the Chinese economy crashes. These 3 stocks will get absolutely leveled. We've already seen over the past week or so, these stocks all have gone down anywhere from between 5 to 10, some even 15%. Alibaba has made a significant downward move. It's come back a bit today, but needless to say, ever since the 25% tariffs have gotten talked about, and that's something that was going to be enacted, all these stocks have gotten hit. Alibaba kind of being the worst of the bunch, Vipshop as well. So if the Chinese economy literally collapsed and just it was a massive recession or something like that, these 3 stocks would absolutely get hammered. Now, for a long-term basis, I wouldn't mind this at all. Although I'm an Alibaba shareholder, I wouldn't mind if that stock dropped to a 120, a 110, or even $100 a share, because I look at this stock and that's a phenomenal long-term investment. I think absolutely that will be a company worth $1 trillion+ in the future. So whatever happens in the short term with the stock price, I kind of welcome it. But if you're looking at a long-term basis, there's a great opportunity in those guys. So that's the first bunch of stocks. It's probably the most obvious because all these companies get most of their business from China, okay? Let's get into the second one. Alrighty, guys, the second stock of the bunch is one stock in particular, and that is Apple Corporation. Obviously, Apple does business all over the world, okay? Mostly US-based, obviously, but also Europe. And China's a massive, massive market for Apple, all right? Now, what we have seen for Apple overall is we have seen Apple this past year, pretty much all their numbers they have missed, or all the growth they pretty much can't get, is because of China. If you look at their weakness out of China, it is pretty much 100% because of China is why Apple has not been hitting their numbers, and basically why Apple's just, basically their business is shrinking overall. If China numbers were just like the same year over year, essentially, like Apple would be in a position where they'd actually be, basically a stagnant business right now, or at least slightly growing their business rather than a business that is shrinking. It is 100% because of China. So if China gets a lot worse, you're going to be looking at a situation where there's not going to be a lot of people paying $1,000+ for iPhones. Keep in mind, the iPhone is even more expensive in mainland China than it is in the States, okay? So you think about some of the highest end iPhones, right? We're thinking about $1,000+ in the States. Now imagine how expensive that is to the Chinese, all right? And keep in mind, the Chinese on average are making far less money than an American makes, right? It's a, extremely significant portion less, okay? If you're in China, a good salary might be $10,000 or $15,000 a year, right? In the United States, we're talking about $50,000, $60,000. So it's a massive, massive difference. And so $1,000 iPhone is a dramatic difference. So if the Chinese economy continues to weaken in a substantial way, look for Apple numbers to continue to get weak. Now, once again, this is all short-term stuff. So it would push Apple's stock price down in the short term, maybe $150, maybe $140, somewhere in there. But if I'm looking at Apple's business over the long term, I absolutely love that business. And when China does come online, whenever that is, obviously Apple would be a huge benefit in China, okay? So that's stock number 2. Let's get into stock number 3. Alrighty guys, the third group of stocks are actually the casino operators, okay? Wynn Resorts, Las Vegas Sands, and MGM. All 3 of these stocks, if the Chinese economy got a lot worse and actually went into a big recession, these 3 stocks would all be hammered pretty hard, okay? All 3 of these companies get significant portions of their revenue and their profits from the Macau region, all right? Wynn Resorts being the most reliant on it, Las Vegas Sands being the next, and then MGM kind of being the least, but even MGM still, a lot of their profits are coming from the Macau region. A lot of their revenue is actually still coming from the Macau region. So if we look at a Chinese economy that continues to weaken, there's not going to be a ton of people just going out there and spending money like crazy and gambling like crazy at these casinos, right? In Wynn's case, it's the high-end players, and if we're looking at a big economic slowdown, I doubt that the player that plays for $10 million in a given weekend because they're a big high roller at a Wynn property, right? I doubt if all of a sudden their net worth is shrinking by millions of dollars a day or you know, tens of millions of dollars a day because the economy continues to crash and their business is going downhill. I doubt they're going to want to go to Wynn and gamble $10 million, okay, or $1 million or $100,000 or whatever it is that player goes in and does in a regular basis. In an economic collapse or a big recession, that just doesn't happen. So all 3 of these businesses could be hurt in a substantial way, and their properties could go from actually, you know, making them lots of profits to actually losing them money, at least in the short term, okay? So those 3 stocks could all get hit very hard. We saw Wynn stock back when, you know, Macau got very weak. We saw that go down to about $50 a share. That was just a few years ago before Wynn Palace opened when Macau got really weak, okay? Wynn stock, by the way, in the last recession was like a $30-something stock. Now, I don't think even in a big recession in the future, Wynn could go down that low simply because they have more properties now. Those properties generating money. The company's just worth a lot more money. But still, this is a stock, if Macau got super, super weak, you could see it back in a, you know, a $70 range again or $80 range. But once again, that's you know, if things really went downhill. So the casino operators, all of them will get hit very hard. Let's get into the 4th one. Alrighty guys, the 4th one of the bunch, not a lot of people even think about this one, and actually their reliance on China, and it is Starbucks Corporation, okay? Starbucks, very similar situation to Apple, where Starbucks has relied on China for showing a lot of their growth numbers. Starbucks has thousands upon thousands of stores in China, okay? And these are usually 100% owned by Starbucks, all right? So let's say the Chinese economy got really weak. And let's say, you know, the Chinese people in general are kind of looking at America's fault for this and whatnot. Starbucks probably not going to be in a very good position, because if America is hated by the Chinese because they, you know, the Chinese believe America could collapse their economy or something like that, or sent them into a big recession, they're going to look at an American brand like Starbucks and say, why would I want to go, you know, get a $5 cup of coffee or $6, you know, Frappuccino at Starbucks in a time where, you know, every dollar counts or something like that, right? So when you're a Starbucks situation, a company that has gotten so much of their growth, a company that now has, I heard something like maybe 8,000 stores. I'm not going to 100% confirm that, but I heard something about 8,000 Starbucks now in China, or some insane number. Imagine if those same store sales start to go down and down and down. We've seen it where Starbucks, you know, same store sales have basically gone from great growth to almost like flattish pretty much overnight. Imagine if those same store sales start going down, you know, 3%, 5%, so on and so forth, and it starts to get really ugly for Starbucks. That's going to send their stock down in a massive, massive way, because it went from a growth market, something that you were bullish on for Starbucks overall, to all of a sudden something that actually starts dragging the business down. And all of a sudden Starbucks start thinking, should we even expand more in China? Should we start cutting back stores and things like that, okay? So Starbucks is absolutely a stock that I think could get hit very, very hard if the Chinese economy, you know, continues to weaken and was to actually go into a big mass recession or something like that, guys. Not one, you know, a lot of people are thinking about, but absolutely they've become more and more reliant on China over time, all right? Let's get into number 5. Alrighty, guys, the 5th stock here that could get hit very, very hard if the Chinese economy went into a big recession would be Nike stock, okay? Nike, another obviously famous American brand, right? Chinese economy collapses, Chinese economy goes into a big recession, you know, let's say USA's blamed for that. Once again, you're not in a great position to be an American brand selling in China, and Nike's another business that has relied on China for a lot of their growth over the past 5 or 10 years, okay? The Chinese numbers have gotten bigger and bigger and bigger, and now, other than obviously obviously the States, and obviously other than Europe, China is their next biggest market. It's their third biggest market now. So you're talking about a business right here that so much of their growth is so reliant upon how the Chinese business does. And I'm just going to go out there on a limb and say, you know, if all of a sudden the Chinese economy was to get much, much worse, I doubt everybody's running out to go buy a brand new pair of Nikes, okay? Especially in an economic situation like that, right? Everybody's going to keep whatever shoes they have in that type of situation, or they're going to try to go to a cheaper brand. Nike's a more premium brand in the shoe space, obviously, and so if I'm looking at Nike, I'm seeing a business that, you know, will be hurt very bad if the Chinese economy continues to fall, and I see a business that honestly, the stock at least, that will get absolutely hammered if the Chinese economy continues to get worse, guys. That's stock number 5. Let's get into number 6. Alrighty, guys, stock number 6 of the bunch is a corporation some of you guys may have never heard of, and it is otherwise known as Tapestry Company, okay? Who does Tapestry Company own? They own brands like Coach brand. You might know Coach purses. You might have bought one for somebody in the past. You might actually own a Coach purse, depending on who you are. And also Kate Spade, another very popular brand that sells purses and wallets and those sorts of things, okay? Tapestry Company, once again, this is another company that is very reliant on the Chinese market at this particular time, okay? A company that's very reliant on how the Chinese consumer is doing overall, specifically kind of the Chinese consumers that are making, you know, 30K plus per year, which there's a limited amount of people that are making, you know, 30,000 American dollars essentially worth per year plus, okay, in China. But that's essentially the market that a company like Tapestry is going after. So let's say these folks that are making 30K plus per year, their incomes all of a sudden drop, they're all of a sudden, you know, are unemployed, or they have to get a job that's paying 20K plus. All of a sudden now they're not in such a significant, you know, way that they can also buy, you know, a new Coach purse for $300, a new Kate Spade wallet for $150 or something like that, right? And some of those products are actually even more expensive in China than they are in the States, okay? So if you're looking at another company like Tapestry, if a big recession hits China, and once again, not a company that people are just, you know, running out to spend money at, and you're seeing something in common. You know, obviously these are straight Chinese plays, but Apple, very, you know, the highest of the highest end smartphones, people aren't running out to spend money on that in times of, you know, hard times. When in these type of places, people aren't running out to go gamble money in hard times. Starbucks, people aren't running out to spend $6 on a cup of coffee. Remember, the Chinese, you know, historically have not even really been coffee drinkers. Something to just keep in mind there. Nike, Tapestry, these brands are all very premium brands, high-end brands, and are great brands overall. But in times of you know, economic weakness, where their products are priced at the highest dollar, either these companies all have to cut prices substantially, which ends up eroding margins, or they have to, you know, keep their pricing and keep their brand and just watch sales kind of not come in essentially at the end of the day, okay? We've got 2 more stocks to get into. Let's get into number 7. Alrighty, guys, stock number 7 of the bunch is actually a group of 2 stocks here. General Motors and Tesla, right? Now, for 2 very different reasons. General Motors is very reliant on the Chinese economy and people buying, you know, General Motors products over there, okay? They have a ton of joint ventures they've done, and they've become more and more reliant on their Chinese numbers over time. So they're already putting up very nice numbers in China over the past few years, and, you know, the GM's called this out several times in the past on conference calls and whatnot. A lot of our strength is from China and the China region, okay? Chinese economy falls off the rails. Once again, not everybody's running out to go buy new cars, right? And then Tesla's for a very, very different reason. Tesla's, a lot of the growth, you know, expected in Tesla is because of the Chinese region. We know the Shanghai factory is getting built right now at you know, breakneck speed, okay? Shanghai's getting built, that factory. That should be opening at some point toward the end of 2019. Worst case scenario, maybe beginning of 2020. And obviously there's a ton of you know, Tesla demand that's pent up there that is expected to come through. Now, if the Chinese economy also goes in a big recession, not everybody's running out to go spend 40, 50, 60, you know, maybe $70,000 or $80,000 on a new Tesla at that specific time, okay? So GM and Tesla are 2 companies that could be hurt very bad if the Chinese economy really goes off the rails. GM because they're already getting numbers and their numbers would be hit, and then Tesla because the growth that was expected to come when that Shanghai factory gets up and running in full production, if that doesn't come, then all of a sudden you're stuck there with, like, you know, trying to count on growth in North America, in Europe, which are markets we've seen, you know, some weakness in growth at least in recent quarters, okay? So GM, Tesla could absolutely be stocks that get hit, you know, much harder than they've already been hit if the Chinese economy weakens even worse. And let's get into the last one, number number 8. Alrighty guys, the last one, number 8 of the bunch, is Caterpillar. Caterpillar makes construction equipment, some of the biggest industrial equipment you could possibly imagine, right? And they're one of the biggest providers of this. So Caterpillar is someone that has benefited huge from basically all the building that has gone on in China over the past decade, all the cities that have been built, all the mining that has been done in China, all those sorts of things. Tons of those orders have been placed for Caterpillar equipment, okay? And Caterpillar's benefited huge from this for basically a decade, all right? Now, on the flip side, imagine the economy goes really bad, you know, all this infrastructure building, all the housing demand starts to slow down, Caterpillar's not as needed out there and things like that, right? That obviously would be something that would dramatically hurt Caterpillar's business, and all of a sudden they you know, get much more basically reliant on the US market and the European market overall, okay? Now the good thing with Caterpillar is we do know there's probably going to be a huge infrastructure bill in the United States that comes within the next, let's say, year or two. I mean, I would be surprised if it doesn't. It's possible it doesn't. So the good thing is when that massive infrastructure bill does come, hopefully within the next year or two in the States, that should benefit Caterpillar. But still, if the Chinese economy got really ugly and you know, all those massive amounts of orders start, you know, kind of stop being placed basically overnight or just over time in general, you know, remember Caterpillar sells, you know, most of the equipment they sell are hundreds of thousands of dollars or millions of dollars. So if all of a sudden orders start to dry up, that's, you know, significant amounts of money that basically just starts being cut from Caterpillar over time, and that's a stock that people would flood out of, and that's a stock that could fall, you know, if the Chinese economy got super weak, that's a stock that could easily fall to a $60 or $70 level if the Chinese economy got really ugly, okay? We've seen Caterpillar down there in the past. It would go back down there again, and right now it's $120 something stock. So it could easily take a 40 or 50% haircut if the Chinese economy got really ugly, guys. So those are some stocks here. These aren't the only stocks. We could spend all day going through different stocks that would be hit, you know, in a significant way from the Chinese economy or just a little bit from the Chinese economy if they got really weak and whatnot. But these are some of the most direct plays that would just absolutely get devastated. Let me know if you guys ever want me to do a video on companies that are almost non-existent reliant on China. I could do that at some point in time. Let me know in the comment section if you would like that. Let me know what you thought about today's video. Hope you guys got a lot of value out of it. Make sure you smash that thumbs up button. All right. Thank you for watching. Have a great day.